This is the Chapter 23 synopsis. This is part 2 of the homeowners insurance section. So for this chapter, what I recommend that you do is read all the PowerPoints just to get an overview of some of the exclusions and just an overview of what they're talking about in this chapter. So I'm not going to go over each slide, but I want you to read all the slides. And then again, for this chapter, go over the homework very carefully. You'll have some application questions relating to this chapter on the final exam. All right, so let's start here. So as I mentioned in the previous chapter, your homeowners policies and renters policies have liability coverage and medical payments. The medical payments are small, but if somebody gets hurt on your property and has some medical costs, the medical payments portion of your policy will pay for that. Also, liability coverage protects you against any legal liability arising, from if someone gets hurt anywhere on your property, inside your house or on your property. Now, section 2 is the exclusion section. So remember, with the comprehensive homeowners or renters policy, it covers, well, renters is mainly content, so let's not talk about that. But with the homeowners policy, if you have a comprehensive policy, they'll cover any peril except what's excluded. So these are just some additional examples of what can be excluded. In the homeowners insurance made simple handout that we went over in the last chapter, they had some exclusions, but here are some other ones. So so you just read these and be familiar with these. Now here's some additional coverages. You can also claim expenses if you're sued. You can claim court costs and attorney's fees. You can claim damage to the property of others. So here, just read this additional coverage section. Now, also read the endorsement section. Here's some things that can be added to a homeowner's policy. Mentioned in the last chapter, inflation guard. So most people want this inflation guard because you don't want to have something happen to your house. And then when you go to rebuild it or repair it, well, basically, if your house is totaled from a hurricane and you go to rebuild, you can't afford to be put in the same position that you were in because building costs have gone up so much. So the inflation guard raises the value of the dwelling coverage by a little bit each year. If you live in an earthquake prone area or landslide prone area, volcano, I guess if you lived in Hawaii, you could get that, but you can get endorsements for that. You can get a personal property less replacement cost endorsement. The comprehensive policy, HO5, typically has replacement cost on your personal property. So as I mentioned in the last chapter, they'll give you the depreciated amount initially, and then once you show them the receipts, show the insurance company the receipts, then they'll reimburse you for the rest of it for the replacement costs. And you typically have a year to replace your personal property if it's been damaged, lost, or stolen. Now, you can also have endorsements on scheduled personal property. So if you recall, there's limits on the coverage for jewelry and firearms typically. But if you had expensive furs, some really expensive things that there might be limits on, typically jewelry and firearms, you can insure those specific items for the amount that for the appraisal amount. Also, you can have a personal injury endorsement. So if you're slandered or falsely arrested, you can get compensated for those, the cost, legal costs for that and so forth. Okay, as I mentioned in the prior chapter, if you have a boat, you typically have to have separate insurance, but you can get a liability endorsement on watercraft on your homeowner's policy. You can get a liability for business insurance, for a home business on the policy, and identity theft. So that's kind of nice to have. And with identity theft is so prevalent these days, the cost of restoring your identity and cleaning up your credit, your insurance will cover that. Okay, so what is the cost of homeowners insurance? It's really become an issue for pretty much everybody in the US. The cost of homeowners insurance is going up because the cost to repair and the cost of materials has gone up, cost of labor has gone up. And there's been we've had a lot more disasters, fires out west, hurricanes in the south and the southeast. And so all of these have combined to increase the cost of homeowners insurance. But in addition to perils, these are some other things that can affect the cost of your homeowners insurance. The type of construction. So the type of construction is really twofold. If you have sturdy construction like a brick house versus wood siding, typically that might be deemed to be a little bit safer, a more sturdy home, so to speak. And so that might lower your insurance rate. So the more sturdy your construction is, that will lower your rate. But also they tie in what is the cost to replace it. And so that can raise it if the costs are higher. But typically, a brick house is going to be sturdier. Depending on if you have a tile roof, if you live in a fire-prone area, the type of roof you have might make a difference, or in hurricanes too. So anyway, they'll ask you about the type of construction. Of course, the location of your home makes a difference. These insurance companies really don't like you to be around water, so that they might not even insure you if you're near water. But the location of your home makes a difference. If it makes your house more prone to hazards. If you live in a high crime area, that can make a difference also. Fire protection class, they'll ask you how far the nearest fire department is, and they'll also ask you how close the nearest fire hydrant is. So that makes a difference. And then, of course, construction costs, the age of your home, the older your home is, the higher your insurance will likely be. And then the type of policy that you want. Do you want replacement costs? Do you want inflation guard? That's going to raise it up a little bit. And then what is your deductible? So I always ask the insurance company to give me some estimates on what my premiums would be based on different deductibles. So usually I found the sweet spot to be around $1,000 deductible. And of course, that's for everything except wind. The wind, which means hurricane, is a percentage of the value of your house, usually 1, 2, or 3% deductible. And then some companies uh, will run a credit score on you. And I've gotten estimates with companies that do use the credit score and don't use the credit score. And I didn't really find it to really make that much of a difference. But I don't really agree with the credit score. I try to use companies that don't do that because I think it's an invasion of privacy. But they're just looking at statistics, and people with better credit scores tend to be lower risk. And so that's why some of them choose to do that. All right. Oh, they also look at prior history. So this is what they mean by this comprehensive loss underwriting exchange. Now there's a system, they've all gotten together, and they have a database where they can see how many claims you've put in. And so they'll look at your claims history, and that will be that also goes into how much the insurance is going to cost you. Okay, so this is the final slide. What are some tips for buying homeowners insurance? So let's just look at this. You want to carry adequate insurance, and they use software to tell you how much you should have based on the information you give them about your home, and they'll make sure that you're at the 80% or above limit on insurance, that you're carrying enough insurance. You might think about what you have in the house for jewelry, firearms, and go back to the endorsement section and you think about adding any endorsements. Shop around, of course, for a homeowner's policy. We're a little bit limited in this area because a lot of companies will not write policies for us because we're in a flood prone or we're in a hurricane prone area. But shop around as best you can. And then consider purchasing a personal umbrella policy. That's going to be talked about in the next chapter. And so think about an umbrella that think about an umbrella that protects you from lawsuits. So let's say that you are sued over the limits of your policy. Well, this is when, for your homeowner's policy, this is when the umbrella policy kicks in. So you could have a $1 million liability. Umbrella is just liability. So that you could have a $1 million umbrella policy. So let's say that you had $100,000 in liability with your homeowner's policy, and you were sued for 500,000 and you lost the lawsuit. Well, your homeowner's policy would pay the 100,000, the umbrella policy would pay the additional 400,000. But realistically, I've looked into these umbrella policies before, and you can't just put the minimum limits on your homeowner's policy and on your auto policy and just think, oh, well, I'm just going to pay a couple $100 a year and have this umbrella policy. They will not give you an umbrella policy unless you have a certain limit on your homeowners. So, for example, the last time I looked into these umbrella policies, they wanted me to have a $500,000 liability limit on my homeowner's policy in order for me to purchase the umbrella policy. And I think they wanted the auto policy limit to be 250,000 or per accident and something like 500,000, 250 per person, 500,000 per accident. So anyway, you have to have the adequate limits on your auto and home policy before you can purchase an umbrella policy. But later in life, when you have assets, once you've accumulated assets, you might want to consider an umbrella policy because they're relatively inexpensive and it does protect you from a lawsuit if you're sued for over the limits of your auto policy or your home policy. Okay, try to improve your credit score in case the company looks at your credit score. Don't ignore floods and earthquakes. So earthquakes are, if you live in California, you have to worry about that. But let's talk about floods. Anywhere you live, if you move away from South Louisiana, you should always have flood insurance, even if you're not in a flood prone area, because believe it or not, something like 80% of the flood claims in this country are in areas that typically, quote unquote, don't flood. They're not flood prone. You just never know what can happen. You can have some spring rainstorm that causes a flood. So it's always good to have flood insurance. It's subsidized by the government and it's very cheap. For example, your homeowner's insurance, you might pay between $2,000 and $4,000 a year for. The flood insurance, just to give you an idea, for the typical house that's not in a high risk area, is going to be anywhere between $350 and $800 a year. So the flood insurance, because it's subsidized by the government, is much cheaper than your regular homeowner's insurance. So you should always consider having flood insurance. Oh, and while I'm thinking about it, this will be in the next chapter too, but when you buy auto insurance, when you buy homeowner's insurance, you're covered that day. As soon as you purchase that insurance, you're immediately covered. With flood insurance, there's a 30-day waiting period. So keep that in mind. That's a possible test question too. Is there a waiting period for flood insurance? And there is. Once you buy that flood insurance, it doesn't kick in until 30 days. So that's something to think about as well. All right. And then take advantage of any discounts that the insurance company is offering. I ask them about that. Well, they typically will ask you questions and try to give you discounts. And then ask them about the deductibles and what the premiums are based on different deductibles. So, you might be a ways off from buying a house, but if you renting an apartment, it's like 300 to probably $300 a year on average for renter's insurance. I would recommend getting renter's insurance. You can tell them what the amount of coverage is. So maybe you just want like $10,000 in coverage for your contents. That's usually the minimum. And the insurance is pretty cheap. And these are some questions you can ask them, like what kind of discounts do you have? Talk about the deductibles and so forth. So I would really recommend renter's insurance in case a liability issue arises. And also in case, you know, there's a hurricane, there could be a fire, in case you need renter's insurance to protect your personal property as well as liability. All right, so this is it for chapter 23, second part of homeowners. And as always, reach out to me if you have any questions. Thank you. Yeah.